Hi everyone. There is no doubt about it. Yesterday's stock market session or Wednesday was definitely a very bullish session. Once again, I would have loved to have seen volume huge on the move to new highs. That would have me really, really excited. But here's your weekly volume with weekly volume average figure on the Nasdaq. So it's not that exciting. But on a daily basis, it was quite nice today to have above average volume hitting new highs. However, as you can see below, the Nasdaq did not outpace its S&P 500, or actually New York Stock Exchange brother when it comes to relative strength wise, because that's what it's comparing it to. And as you can see, the NYSE is hitting new highs on volume that is just slightly above average. So once again, nice to see slightly above average volume, but on a weekly, it's still as lame as it ever has been since the rally started in 2009. And on the NASDAQ, as you can see, it's not as bad. You can see way more above average volume green bars than on the New York Stock Exchange, but still, those red bars, man, they really stick out and they just don't make it look really, really great. And would you be kind of shocked to think that there was a rally for this long without a 5% pullback in the market since the November lows and or a 20% pullback since our flash crash? And I don't even think we got a 20% decline in 2011, but we did get a 20% decline intraday, so we'll count it as that. But it's been a long time since we've had a real meaningful pullback. So hard to be extremely bullish up here, but it is bullish nonetheless. Still, at the same time, you can't leave your guard down, as Rax is down 20% after hours, and that's just an ugly, ugly, ugly move. And we can see DCO lately after missing earnings, SRDX today, LinkedIn recently, Zillow today, SFUN not acting that nice. SALM, which was a very value rich stock I was following, kind of ate it today. Value Click today, and AXLL, a previous long of ours, completely ate it today. So definitely not in the clear. And on top of that, we got two longs, Chewy closing below the 50-day moving average. That is a 25% sell. If it was on heavier volume, it might have dictated a 50% sell, but as it is, we'll see how it acts the 50-day moving average. If you don't want to sell it today, you can put in with a close at 31.24, not a close, but a move below 31.24 as your sell area. And INSM, same thing here. As you can see, 859 is still above, the 852 support level right here, but the 877 close, 871 close, it's closing below that, and on top of that, it's closing, so it violated its 10-day moving average, violated the low of that 10-day moving average failure yesterday, and that on top with it closing below the recent closes here of that May support equals a 25% sell. So once again, nothing's perfect out there, but still, look at Whole Foods Market, that buyable gap up, that worked great. And another canceling stock, LOPE, Grand Canyon Education, look at that buyable gap up. Volume was well above 150% in the morning, and the gap up was to new all-time highs on the stock, which is just what WFM did also. So look at those stocks, look at those charts. I mean, you just can't beat that. You get all-time high breakouts just above recent support areas. I mean, our recent long Fossil was like that, but Fossil stayed in a tight range, so I could add to it at the end of the day of its buyable gap up. But the buyable gap up here, it didn't have the 150% volume surge, but still LOPE and WFM definitely did. So great, great, great buyable gap ups. And not only that, GMCR tonight, not tonight here on Maui, but in the morning, for the morning for you guys, buyable gap up in TSLA. I don't think that that's going to be a buyable gap up because it's already in a very extended uptrend. GMCR would be good, but I'm already long call contracts in that in a third side account, so let's keep that in mind. Also, I don't think I disclosed that on the regular website, but Tesla, it's so far extended here that there's no way I would take that long. What I am taking long tonight is OCN. I brought it up yesterday, said that it makes a great long candidate. For those that are already underinvested, I was heavily invested. Got a confirmation of the move from yesterday on even heavier volume with BOP moving up quite nicely to the green zone. and it's not too extended away from yesterday's move. And we just had a series of 2 out of 3 days with pocket pivot point buy signals, then the strong breakout above the 50-day moving average on earnings, and the follow through. I'm willing to go ahead and go 2% if this was a market where we could be seeing us hitting new highs here with volume well above that yellow line. OCN is easily a 5 to 10 percenter with a chart pattern like that. And also DDD, that's going to be a 2%, 2%er. If it comes to be like, am I going to be either 2.25% invested in this or 1.75% by, because I like to go evens in the amount of stock I buy, even though this stock has plenty of volume, and you could buy, let's say, like 101 shares instead of 100, or 102 shares like I would do instead of going 101 or 99. This has enough volume that you could do that, but overall, I would err on the under 2% because even if it has a normal pullback, you're going to lose 5%, and the final cut loss is going to be a 10% move lower. So it's going to have to fail 10% before we finally know that this one is going to work. Passing on THS, you can study it a little bit harder if you do like it. Doesn't have the oomph I wanted. And passing on MHK, really, really nice stock. I have a feeling I'm going to regret it, especially since it's a $117 stock. Mohawk Industries, it's got some good growth, so I'm 100% sure I'm going to regret not buying this. But the reason why I'm not is that the base is just a little too slow and or sloppy for me. It's not really a double bottom with handle pattern. It's kind of a short handle, if anything, and a double bottom. It's supposed to be, quieter volume on the second leg down, so that fails. So it's really on a weekly, just still in an uptrend, not really basing. So I'm going to go ahead and pass on that. Under heavy watch, TROV, I love this chart pattern forming here. Huge accumulation on the right side from November to January. Low volume during the basing period, and now it's starting to get very, very, very heavy accumulation as it builds a right side. Overall, I definitely like that pattern. And then ININ is what I'm going to continue to watch under some extremely huge accumulation, some very nice strong earnings. It's a thin stock, so I would like to see it continue to trade heavy so we can get some volume expansion on it, and I'll be watching this one in the future.